Some of my best videos, they come from actual conversations I have with clients. If you're trying to move money out of a 401k, maybe you want to cash out or withdraw the money, move it into another environment, you have to make sure you do it correctly. Let's see, if you move money from your 401k and you do it the wrong way, you could be in store for huge tax penalties.
What did you say?
For example, let's say you make $100,000 a year and you have $200,000 that you've worked hard to save up inside of your 401k, and you decide you're going to move that money because you're retired. You're no longer working for the company. Well, if you move that money incorrectly, you could owe taxes on the entire 200,000. That 200,000 will now be added on top of your income, and the IRS will tax you as if you made $300,000 that year.
Hey, stop playing games with me.
If we do the math, that will cost you about $68,000 of your 200,000 that you have.
Now give me my money back!
$68,000 gone simply because you rolled your money over the wrong way. Now, the safest way typically to ensure that you avoid this issue is to do what's called a direct rollover into an IRA. This direct rollover allows you to preserve the tax deferred status of your investment, meaning you don't have to pay taxes on it in the year that you move it. And instead of paying taxes on it all at once, you can decide, at least for a period of time, how you want to access portions of that money to manage the taxation of those assets. So if I want to sum up this video, I guess the point that I'm making is that make sure you're working with a qualified professional if you want to move money from your 401k into maybe your IRA or some other asset, and make sure you do a direct rollover. That's the simplest way to avoid any of the headaches that come along with the other ways to move money from your employer.